Thank you, Kim. And just to say again, this panel is European investors explaining what they're seeing from European wealth advisors and investors as regards their interest in blockchain. So Jonathan, maybe you could introduce yourself first and a little bit of your background, please.
Delighted, happy to do so. Matthew, nice to see you. Alison, I didn't have a chance to say hello, but nice to see you both. So my name is Jonathan Ordway Fackelmeyer, and I run a number of entities here out of Zug in Switzerland that carry our family name. And as Matthew rightly put, I wear a few different hats because as a family office, we started investing in the blockchain space hand in hand, actually, with Matthew and Alison going back to 2019 at the very beginning, and have followed that journey through a number of the different funds, through a number of the different co-investments. And that journey actually also brought us to where we started to attract some other co-investors that wanted to follow us into some of the work that we were doing and deploying capital in the space. And that actually then also matured, whereby we ended up syndicating larger transactions that we were part of, actually to other asset managers and to the banks here in Switzerland. Obviously, I'm happy to go into a little bit more detail, but I'm sure that Matthew, you'll be able to direct us through this panel where you want us to spend a bit more time. So I will pause there. Nice to meet you all.
Yeah, thank you very much, Jonathan. And so now going from Zug, let's go across to London. And Phil, you have a very different background, so please could you just give us a quick introduction for yourself and what you do.
Absolutely, and thanks again for the invite and the opportunity to speak. Yeah, I'm Phil Beattie. My background is very much on the buy side, so I spent nearly 15 years at JP Morgan Asset Management, running business and product strategy for them, and then a number of years at MSCI, where I worked with a lot of the largest investors in Europe on benchmarks, integrating new topics as they come along, like ESG factors, etc., into their investment strategies. And now, more recently, I work with high-quality alternative investment managers on distribution strategies for both Europe and a little bit in the US as well. So that's ranged from launching the world's first physically backed carbon fund to now working with Matthew and the team on distributing blockchain into Europe.
Thank you very much, Phil. And Kai, I know you and I are going to be in Hong Kong later this week, but I'm not sure where you are today. So where are you today, Kai? And please introduce yourself.
Yes, so I'm in Singapore today. I will be attending one conference here, and then I will fly to Hong Kong tomorrow evening. And yeah, looking forward to seeing you there on Friday or the weekend. And yeah, so basically my background, I started my career in investment banking with JP Morgan M&A. Then I worked on the buy side with 2 investment funds. And I went into the blockchain or digital asset space around 7 years ago. And I started to invest personal money or family money, and had a few successes. And some of those successes were also determined by me working with the companies and forming partnerships for the companies. So I found this is what was a very good investment approach to help the company and help the investment. And so what I do today is that I invest in early stage companies. Then I often also try to bring them forward. And then as I said, like I had a few good exits, and so I allocate nowadays across venture, and that is then direct or into funds. And then I also allocate on the traditional side, and that might be in real estate or credit funds. And we are both invested into a few companies and a few funds together.
Thank you, Kai. So we chose the 3 of you because you do have different backgrounds and profiles, and we think you can speak for the European investor in the aggregate. We had close to 400 people register for today, and many of them are here with us right now. About 2/3 of them are US based. And I don't think we should presume that they know the different wealth categories in Europe, because I know it is a little bit different than it is here in America. So the first question, and maybe I can ask Jonathan to go first on this one. The first question is just how do you think about or segment the wealth landscape in EMEA? Do you have some thoughts that you could help kick us off with?
Sure. In perhaps no particular order, but generally you'll find investors seeking to deploy capital based on a strategy that fall into a number of different buckets. Obviously, one that's familiar to all will be the family offices that tend to take decisions themselves within their own structure. Now, that structure can vary depending on how sophisticated or large they are and what the particular mandate of the family office is. So we'll leave that for one. The next being what is referred to as a multifamily office. Here, the idea being that you have multiple families that aggregate together. But that really the fine line between what a multifamily office is and an asset or a private client asset management firm is slightly blurred because there's no set size on either side of the coin. Some call themselves the former and some the latter. Then you have what you would call the private banking clients, whereby they tend to deploy their capital through their relationship managers. And sometimes, depending on the size of the client, they interact with different departments within that private bank. Sometimes they're called private client solutions, the private markets team, the direct transactions team, etc., where they can usually access some of the alternative markets or the private markets through their bank. I suppose then moving on from the private clients, you have more of the institutionals, and those, as many, tend to be linked around pension endowment, insurance, and those would be probably the grouping on the institutional side.
Thanks, Jonathan. Phil, because of your long history serving the higher end of the institutional market, is there anything else you want to break out in that segment?
Yeah, maybe I'll just add to what Jonathan said in terms of those channels. I think the most important thing to recognize for the folks in the US is there isn't a single market. So you can't think of Europe as one market. I mean, the rules around what you can do to promote funds, for example, private funds, are completely different.
Okay. Thanks, Phil.
In different markets, you can go and pay a lawyer to get a big, thick document that tells you what you can do in France versus Austria versus Germany, etc., etc. So it does require, some mapping to understand, where you think you'll appeal and then what you're allowed to do in those different places. And really, the key then, I think, is to understand how that channel distribution varies by market. So to Jonathan's point, the family office market obviously exists, everywhere. It's very similar to and very familiar to people in the US. Private banking is much bigger, and the sector is much bigger in the UK, Switzerland, and then maybe Germany, and the discretionary fund manager market as well. Other markets are much more bank branch network led below that sort of ultra high net worth family office sector. So places like the Nordics and Spain are much more driven by bank distribution. So understanding that is important, because where the actual investment decision making takes place varies hugely between central panels versus individuals who are making a decision on behalf of their own money, right up to advisors who will sit in front of a client but can't actually choose for them to invest in something without a head office or a central research function approving it.
Thank you, Phil. And we'll return to that later. Kai, anything you'd like to add in terms of the interactions you have with investors from a categorization perspective?
Yeah, so I would say, it ranges from family offices to pension funds. By default, I speak more with family offices, and I compare notes with my peers, so to say. And there it's also the question I feel in terms of how did the people make their money or their fortune. and that kind of determines their risk appetite. So, and I, of course, like spend probably 60 to 70% of my time in the digital asset space. So this is what I would like to compare notes with. And then I find, for example, in the Middle East, you find a lot of family offices, but everybody just likes real estate. So they are not really interested in digital assets. And then you have the tech entrepreneurs who had an IPO or a good exit. And then they are, of course, very interested in learning about that space.
Thank you. So actually, I'm going to ask you each, how did you first get enticed, if you will, by blockchain? Because I think you do represent different types of investors. And so Jonathan and Kai, I'll start with you two first, because we've known each other for a long time. You know, in our early journeys to Europe 8 and 10 years ago, we were looking for people who got blockchain as we felt we got it. And that's why we got to know each other in the first place. So Jonathan, starting with you, you know, your family is one of the oldest, most successful families in a way. You know, the Ordways were part of the original seeding team of 3M, and you didn't need to get involved in blockchain. You could have invested in any asset category. I know you do invest in several, but what got your attention vis-a-vis blockchain in the first place?
Thank you for the question. So I think, you know, curiosity probably was the first, and curiosity led to wanting to understand something probably a bit better. And we have a saying in the office that if you want to understand something, put a little money at work. It tends to sharpen the mind. And that's exactly what we did. We started, as you well know, putting some money, trying to understand where that led, trying to understand the ecosystem. And from there, that allowed us, I suppose, the comfort to continue to invest into the space. So it really was that initial curiosity. And it really was, instead of trying to hear about things or what other people were doing, we decided to invest some money and spend the proper time to try and understand the ecosystem.
Thanks, Jonathan. And Kai, what was your personal moment, if you will, when you got started?
Yeah, that's a good question. So I think about where do I want to spend my time? I want to spend my time in situations where there are inflection points or where there are growth scenarios. And I just found that the blockchain and crypto space is, I mean, well, it has been, let's say, started with the initiation of Bitcoin. But when I started in 2017, it still felt like very nascent and very new. And so I thought this is a great place to be and to just like be part of this new industry that is emerging. And I remember, I mean, during the .com boom, I was still too young, so I thought this is now the opportunity to be part at an early stage from this new industry. And yeah, and this is how I got started. And then, of course, I left when Bitcoin had its first big rise in 2017. So this also yeah, helped with me leaving my, let's say, corporate job. I was an investment banker at the time. Yeah, and then it has been like extremely interesting to be part of this industry.
Thanks, Kai. And Phil, you know, most investors in the world have not yet invested in anything to do with blockchain or crypto. So I think there's nothing wrong with being relatively new to the party. And I think, Phil, you are coming more recently to the space. So I'm curious, what is it that's got your attention now?
Yeah, it's really two things beyond the intellectual curiosity angle that Jonathan mentioned for me. So the first is actually working on carbon. So carbon is very hard to hold, very hard to trade, and a lot of the biggest banks in Europe still can't actually hold a European carbon allowance. So we were actually looking at tokenizing that. We still actually have the right to tokenize physical carbon for the US market, which is actually quite a rare thing to do. So that was, the first one is actually working on an asset class where tokenization has a clear benefit and use case. The second thing, more in my kind of advisory role that I'm working on now, frankly, is client demand. So when you start to hear clients asking about it, then it's like, people start saying to me, well, this is great, this carbon or this real estate option you're bringing me. Are you seeing anything about Bitcoin, about crypto, about blockchain? So that really started to develop. And for sure, I think what Kai was saying in terms of starting with rich individuals who've made their own money, and they're the lowest hanging fruit because their decision making process is often just, I want to buy this, and then you can. So that's I think where the interest started. Whereas for institutions who are a lot more naturally cautious, but also have to follow a much more rigorous process, it was initially very hard, both because they didn't know where to put it from an asset allocation perspective, so it doesn't fit into any of the traditional buckets that they're allocating to. And because the volatility uses up, if you're running to very strict risk controls, volatility can use up a lot of your risk budget very quickly. So, so definitely I saw the interest first in the family office space. And then what I thought was interesting is we started to see wealth managers start to almost carve out a kind of extra portion of assets that could be invested wherever the underlying client wanted. So it's almost like we'll forget our overall risk and rules. This 5%, you just tell us what you want and you can have it. And that's one of the areas where we started to see allocations. And Bitcoin, traditionally had been used for things like, well, I have a second property, in Spain or whatever, and that would fit into that category. But we started to see that being used for allocations like this as well. And as you say, now I think we're getting to a stage of people are thinking more carefully, where does this sit within a strategic asset allocation? And that will widen the scope of potential investors further.
Great, Phil. So I think you've eased into the next question I was going to ask, in fact, which is, here in the States, we've had a dramatic shift, clearly, in the last few months. And we, as early stage venture investors, are still not particularly happy with the state of affairs, in the sense most investors are not yet getting early stage venture investing where we believe the returns are typically very high. But the Bitcoin spot ETF has dramatically changed the landscape of who is gaining exposure. You'll hear more about that when Bitwise, Coinbase, and Securitize and others join us after lunch today. So I don't want to say too much about this, other than that it's the fastest launch of an ETF ever, and the asset accumulation is remarkably fast, even though there have also been significant outflows because of the GBTC product, which held the treasuries of some of the bankrupt players like FTX. And so they've been needing to sell down at the same time as new assets have been flowing in. So a dramatic shift in the US, with a lot more RIAs, a lot more institutional investors allocating. But Jonathan, what are you seeing in Europe? Who is leaning into blockchain? Which type of wealth advisors or family offices or MFOs do you see? And are there any common criteria? Are there any ways to see who's engaged and who isn't?
Well, I mean, coming back to what was said a little bit earlier, and Phil mentioned this, that we talk of Europe, but the criteria and the profile does change depending on which country and where you are. As you know, we're based in Switzerland, which is very open to this particular asset class and has embraced it for some time. I think the other institutions and investors around Europe are certainly much slower in their adoption, I think, than what you have certainly described in the US. But if we're to consider sort of how we are looking at things and the evolution of how the regulatory framework is playing out and still playing out, but at the same time, no one can ignore the appreciation that we've seen sort of peak to trough and back to peak now, that a lot of people would like to be part of that. But one is the recognition of the value, and obviously the first go-to is Bitcoin. But within that, I think a lot of people are starting to think more about, well, what does the innovation around that actually look like? What does the infrastructure, the picks and shovels, what does this ecosystem actually require, whether it's on and off ramping? And then when one starts to get into those conversations, you'll see that to date, now we've have more should we call it easier access to Bitcoin and via the ETFs, but into the innovation space and the VC space, as your portfolio managers were saying before, it's not that easy to access. First of all, the allocation is not necessarily always there. And therefore one would actually try to search out something which you have done, which is you've been able to actually build up a certain allocation and over the years, whereby a lot of people don't have that type of access yet. So that's the one point. The next point that I would like to make too is that, as you know, a lot of the European investment is very much held within the private banking system, because even if you're a family office and decide to invest, you do have to invest usually out of a custodian. And the custodian traditionally doesn't like private markets so much, because that usually means AUM out the door. However, we've seen more and more, and we've had this discussion a number of times, whereby people are using ISIN numbers and certificates to be able to access this type of private market transaction while still keeping AUMs within the traditional custody and private banking system. So that, I think, has been a bridge and allowed to unlock a lot of interest that was building up that wanted to have access, and perhaps because of the structurally making it a little bit more difficult to access, the interest hasn't always translated itself into exposure. So there are a few different points in there that we can drill down into if of interest.
Thank you very much, Jonathan. Kai said something earlier which I'd like him to amplify, but I want to give you a story. When we first launched our first blockchain fund of funds, it was actually very hard to get the attention of investors. And we always say the true unicorns for us were the initial investors. We're very grateful to them, but they were very hard to find. They were very rare animals. And we were lucky that we got 60 or 70 of those people to join us on this journey all those years ago. One of the common denominators was that they themselves were very technologically aware. And I'll give a specific story. In the 90s, I had worked with someone who went on to be one of the first people at Google. And at the time, I won't name him, but he was at Netscape. And we had spent some time together around Netscape's rollout to enterprises. And we picked up the conversation again a few years later when we launched our blockchain fund of fund, and he just got it immediately. There was no issue. He had been an early player at Netscape. He was one of the original families at, well, not families, one of the original people at Google. And now his family office wanted to deploy technology, money into the next wave of technology. And for him, the upgrading of the internet was required, and blockchain was clearly the enabling technology. He came into our funds, and we're very grateful he did. But it was obvious. So going back to you, Kai, you said, I think, if a family office has a technology bias, this is an easier conversation. Just amplify that a little bit. What did you mean by that?
Yeah, I mean, you amplified it already. I mean, it's exactly the point that people who made their money in technology understand that they have to invest in sectors that are growing, that have like good like inflow of people and new use cases and things what people get excited about. And they are not so obsessed with wealth preservation, which they of course care about. But then you have your more traditional family offices that really just, as I said, I mean, it's maybe exaggerating a bit, but that they are very focused on real estate or just like asset classes where nothing can go wrong. And as I said, like I think people who made their money in technology know that they probably also have a higher risk appetite and also a higher need for returns in their investments. And I think, yeah, this is really something the blockchain and crypto space offers, because the companies are very novel, and they, as you saw in the past, have grown tremendously, some of them. And when you say you're in venture, you should really look for asymmetric risk return profiles, because what I look for in investments is really, especially in the token space, where you can make liquid investments, that if a token, if I have conviction in a token and then I buy it, I might lose, let's say, 20 or 30% of my money, but the upside is just 5 or 10x. And that's really in a time horizon that is very different from what you see in the traditional venture space. So that's really, and people who come from, as I said, technology backgrounds really understand this, the fast pace of investments, or specific investments much better. And and that's what I think brings them to this asset class.
Thanks, Kai. And Phil, you got us on this track. So, within blockchain, we've been waiting for the arrival of institutional capital for a long time. And in fact, it probably got slowed down because of the whole mess of the FTXs, etc. What's changing right now, Phil, in your view, vis-a-vis this conversation?
Yeah, I think Jonathan and Kai have covered a lot of it from a demand perspective, but maybe just to take a bigger picture, a macro view, not just focused on blockchain. It was hard to sell anything with risk involved in 2023. So it was just a huge risk-off environment. We saw inflation spiking, interest rates rising rapidly, huge macroeconomic uncertainty in terms of where the global economy was going to go. For context, if you think about a 40-year-old portfolio manager, they've probably never seen interest rates anything other than 0 or near 0. And for the first time ever, suddenly they're getting 5, 6, 7% return on cash. So I don't think this was unique to blockchain to try and get investors' attention in 2023. What we're seeing now coming into 2024 is obviously that's very much changed. Inflation fears have receded. Interest rates are now widely thought to have peaked. And again, people are saying, cash returns aren't keeping up with that inflation that's bitten into my capital, and I need to find diversified sources of return again. So just to add to what they said, I think the macroeconomic story has very much played into a more receptive environment in 2024 than we saw in 2023.
Great. Thank you, Phil.